Greetings, ladies and gentlemen. Welcome to Mene Education channel. Once again, thank you very much for liking and subscribing. Keep liking, keep subscribing. Trust me, this is going to be life-changing. Today, we've got a special guest, a professional and a licensed financial planner from Sanlam. She's going to introduce herself.
Hello, thank you Mene for having me and having me on your channel today. I really appreciate it. It's nice seeing you again. My name is Maureen Paulson. I'm an accredited financial planner and I work for Sanlam. I have 4 years of experience behind my name. Also started out small as a personal assistant for a broker and eventually built myself up. Got my wealth management behind my name, my RE, and I'm working towards a certified financial planner degree.
Wow.
So yes, thanks.
This is gonna be great. This is gonna be great. So we're just gonna begin with just a few questions for you, so that we can get to educate more people about the financial world, because a lot of people believe they've got control of their finances, but instead it's the opposite. Finances have got control over them. So what are the most common financial mistakes that people make, and how can they be avoided?
A lot of mistakes people make is not planning. So without proper planning, you will fail. So I always say, whether you earn a lot of money or you earn big money, if you don't plan and you don't have things in place, like whether it's a 1-year plan, 5-year plan, a few months plan, you don't know where you're going. So when you have money, you start wasting it on unnecessary things that you don't need and end up regretting it. So I would say that is one of the biggest mistakes that people make.
All right. So how do you define financial stability?
Financial stability is, it's definitely when you know what you have in place.
Okay.
So you can have your monthly income and you can have policies, but sometimes policies and insurance and investments might not be according to your profile, the person that you are, or the needs and the wants that you have. So in order to be stable in your finances, it's always good to sit with someone and talk about it, because you don't always understand all the implications that there is. Whether you're alive, whether you're dead, there's certain things that needs to be paid. Such is one of our biggest things. So I would say to be stable is to make sure that you speak to a professional and get their advice on what you need to put in place if you haven't got that yet, and what is the stuff that you have in place, and is it the right things for you, because some people are over-insured as well, and that creates a lot of problems, because now you've got this emergency happening and you don't have any funds, or you need to go to the hospital with the doctor, but you don't have cover for that and you thought you did, and that is when it gets very difficult and people start getting angry because they weren't helped and explained in the proper way. Yes.
So basically, for one to be financially stable, they need to speak to a professional, so that the professional aligns their financial goals with their financial status, or how they are in terms of finances.
Yes.
All right. No, that actually makes sense. It actually makes. All right. So what's the best way to create a personalized financial plan?
Because some people say I get too analytic, but it's important to go into the smaller details of why you need a personalized financial plan. And everyone is different. You might gamble with your money, like take big risks. Where I don't have that affordability, I must be cautious with my money, and I must, like, I've got a family, I've got a child, I'm a single mother. Some people are single bachelors, they can go out, they can do what they want. So everyone's circumstances is different. So depending on your circumstances, it's good to have a personalized plan for yourself. People that are married, the ways that you are married is different ways in community of property, out of community of property. All those things affects your personal plan for your finances. So I would say starting small, taking your income, taking your expenses, checking what is the money that I get in, what is the money that I have to give out, what is necessary, budgeting. So that's basically budgeting. Secondly, I would say your personalized plan would be like, what is my need at the moment? So if something would happen to me, am I covered? Because I'm the only breadwinner in the house. So if I can't bring in any money, I can't pay my bills, I won't be able to keep my house or my car or pay for my child's school fees. So it's all of those type of things that you must also keep in mind. And then, especially when it gets to older clients, some of us have seen our families, our mothers, our fathers, grannies, and all of them go through the same problem where when they get to old age, there wasn't planning at all. Nothing was personalized to them. They didn't think of what I need in order to survive after I can't work anymore. So that would be like, that's how you personalize what you need. Like, I need insurance to cover myself. I need to make sure that I have a budget so that I can stick with my budget and be disciplined with it. And then what do I want? Maybe I don't have my driver's license. That's an example of myself. Years back, I was driving without a license for years, and I wanted to get my license. And this one person I used to work with said, Maureen, what are you going to do? You have to work with a plan. If you don't have a plan, then you're going to fail. So she said, you want your license? How long is it going to take you to get there? So I set up a time, 12 months. This is how much I must put away. This is when I want to start going for the driving lessons. And at that time, I want to go for my license. And because I had that plan, and because I was disciplined and I saved for it, I was able to get my license, and it was the best day of my life. And that was something that I wanted, but I also needed it. Where other people might want a nice car, or they might want a vacation. That's something that you want, but you don't need. So personalization when it comes to finances has to take all of that into consideration as well.
Okay. So also this takes us back to the fact that for you to be successful in life, or to do everything with success in place, you have to plan. So without planning,
you're gonna
fail. All right. No, that's great. That's great. One of the things that I've always had people speak about, and they actually suffer a lot from that, is whereby people would like to get credit, but they don't really get credit because of their credit score, or some it might be due to income. So how does a credit score impact your financial health, and how can it be improved?
So biggest lesson I've learned is you get good credit and you get bad credit.
Okay.
So let's first talk about that. Good credit would be, I've got a house and the bank insures my house and I pay a bond back to the bank. That is a good credit. A credit card is also a good credit. Paying off a car is a good credit. Those are, if you can do that disciplined every month, or even when life happens, you might be in hospital for 3 months, not have enough insurance to cover, make plans, put that in place. That is a good credit, and that is also protecting your credit score. Then you get bad credit. Bad credit, and this is usually where people suffer a lot, is revolving loans that you get from places like Woolies or banks like FNB that gives you temporary loans. So you go back every month, and every month you must take 1,000 rand, 1,000 rand. So you never get ahead in life. More bad credit is clothing accounts. Maybe you don't have any credit record, like the youngsters. They need to get credit in order to start building their credit record, so that they maybe can buy a car or buy a house, because that's what the banks look at. So now you open a clothing account and you make the mistake of over purchasing on that. Instead of buying something every now and then when you need it, making sure you pay off the monthly amounts and installments that you need to do. Because what I've learned, and I've been under bad credit before in my life, and I put myself there under debt review because I was taking temporary loans from FNB. I had personal loans because we needed to fix the car. I had clothing accounts because I needed to buy my child grade 1 school clothes. Stuff like that. And I'm talking out of my experience so that people can relate to this. And it took me 2.5 years to pay off that bad credit through a debt review center. So in that time, you are stopped and blocked from getting any help from a bank or personal loans or opening any accounts, which is a good thing because it teaches you discipline and it teaches you that you can go without having to take a loan out somewhere. But you are going to suffer for a while. But it's a good way to learn discipline. So that's the good and the bad credit. So how can people, how can they make sure that their credit record is good? It's always paying on time. Make sure that you pay your credit on time. If you can't do that, fine, make arrangements, make sure you stick to a plan. If your budgeting isn't right, you're also going to suffer from bad credit because you're going to overspend in places where you don't need to. I see a lot of people spending way too much money on entertainment and not looking after the stuff that they need to pay, their needs. So that is where the bad credit comes in because now, oops, I forgot that this payment for the car is going to come off and now I have to go and take a loan. So that's also, but how you can improve it is, I would say, make sure that you stick to your payments. If you need help, there's a lot of places that can help you. So we at Sanlam actually offer and help people with this. If you feel like you're stuck and your finances isn't really where it needs to be and you've got maybe too many things that you're paying off, I wouldn't always ask people like, go and take your retirement money and go pay off that, because then you have to start all over again where you could have accumulated a lot of money for your retirement, and it puts you back in taxes as well. So definitely speak to people. If you need to get a consolidation debt, what we call is maybe, Mene, you've got 3 personal loans. But the interest on each personal loan is 11 or 12 or 18. So now what you end up doing is you're paying so much more than what you have to pay. So you go to one institution like Sanlam, you ask them, please give me one loan to pay off these and I pay you back at a lower interest.
All right, no, that's actually quite interesting, really, because a lot of people don't really know much about the consolidation side of things, so it's quite really interesting. But you can tell me more.
Yeah, so with the consolidation, it's just basically, it doesn't block you, so it doesn't stop you like with debt review, where you won't be able to take out another loan or anything like that, but it just consolidates all of the debt that you have and basically gives you a lower interest. So for people that still want a good credit score, that might be more beneficial for them. But for people that's like bad in debt, a debt review would be good for you because it will teach you financial discipline. And it will also build your credit score back up again. To a place where you can be comfortable and you've got enough time to plan your finances, to grow in your career, to make sure that you make all the right moves in order to, like for me for instance, because I'm out of the debt review, I can now go and purchase a car or a house, but it took me years to get there, but it also taught me a lot of discipline. So that is what good and bad credit actually looks like.
Wow, that's great. So it's very, very, very important for people to take their financial life very seriously, because now if you don't know what the difference between good debt and bad debt, then you might end up in bad debt, and then it might affect you for for many years in your life if you fail to actually get to get out of that debt. But that's really quite interesting.
The other thing, sorry, that I wanted to mention is like the very last resort that people do. That's one of the worst. Is you go to a loan shark. And then you pay very high interest back to that, or you go and you sell things that you have to cash crusaders, for instance, stuff like that.
Small money,
and it's not worth it. There is a way, there's a plan, and there's people that can actually help you, and you don't have to feel bad about doing that or making that decision, asking for help.
So now, to help someone that's watching, at home, what are some essential financial goals that everyone should prioritize?
Definitely, I would say the first thing is a big goal would be to make sure that you have a budget. If you don't have a budget, like we mentioned before, there is no planning involved, you overspend, you end up having to take loans, getting bad credit. So that's number one on the list. Number two would be to insure yourself. You are your biggest asset.
Okay.
So a goal that you need for your finances is, if anything does happen to me, well, my loved ones, maybe you don't have a family, but you've got people you live with or people that you're looking after that's dependent on you. So definitely to make sure that you leave something behind for them, or that they can still take care of themselves if you are no longer there. Other goals would be, I feel as a person, there's a lot of mental health issues, especially revolving around finances with people. They are stressed out. You go to work stressed, you feel like you're working constantly but you're not getting ahead in life. So if you can prioritize yourself by also doing something nice for yourself, making sure, like, even if it's maybe you take a small amount of money and you go do something for yourself, whether you go eat out, you seek your family for something, you buy something nice for yourself, not just to waste and to lie there in the house, we do that, but to actually maybe build yourself going forward. Like, okay, I want a laptop, that's maybe one of my goals, so I'm going to save for a laptop. I'm going to start doing a lay-by, things like that. So that's a good goal to have for yourself as well. Some of the other goals is, we are not promised that we're gonna make retirement, but if you do make retirement, you want to make sure that if you have kids by that time, you don't have to depend on them, you can look after yourself. So definitely make sure that for future references you've made provision, and enough provision, because people think R1 million RAs for retirement, that's enough, and it's not enough. It doesn't last you. If you are used to having an income of 20,000, now you've paid off your bond and your house and all of that type of things. By the time that you retire, you have medical issues. Now you have to pay more for medical. So there's some cost that goes away and there's some that come with, but you're going to need more or less 70% of your income that you used to have. So going from 17,000 or 20,000 to your SASA only, it's not going to help you in life. You're going to have to stand like this and ask people for help, and you don't want that, and you're too old to get loans. So that's definitely one of them. And the other thing that I'd also just mention, this would be my last point. It's a very important point. When it comes to investments, I wouldn't say people understand it properly. So investments has got so many different factors to it. Firstly, you as an individual, if you don't have an emergency saving, and we call an emergency saving is having your salary times 3 or times 6 at most. For events like when the geyser bursts and the insurance doesn't cover everything and you need to make an access payment, or the car needs replacements of the wheels, or kids is in the hospital and the hospital didn't cover everything, like that's your emergency savings. But it's also good, like there's a rule when it comes to finances. 50% goes to your needs, 30% goes to your wants, and 20% you must put away for savings, because you always need money for a rainy day. And investments is very, very important. It's you're actually investing in yourself. You're making sure that with investments there's money available for you, and you get different types. So we'll go into that one day. So you guys do the forex, but you also get the longer term, shorter term, fixed investments. So there's different varieties of it. But I would definitely say, like, you want something that gives you compounded interest. So the money that I put in is not just the money I'm getting out, but it's money that's getting interest, and on that interest there's more money and more interest, so it keeps on growing.
Yeah.
So that's definitely investment is something that will benefit you. You can purchase things with that at the end of the day. You can buy yourself retirement, maybe go live overseas.
Yeah.
Have fun.
Yeah.
So that's the rule of thumb that we use in finances when it comes to investments.
Well, that's great. Guys, this takes us back to the importance of being in control of your finances. So if you know that whatever that has been said, you are not living up to it, or you do need more information or a consultation, do not hesitate, guys, to go down by the comment section, leave your phone number or leave your name or your details, and we will contact you and ensure that we do assist you when it comes to your financial planning. Thank you very much.
Thank you so much, Mene, and thank you everyone else for watching. It was nice speaking to you, and I hope it's insightful.
Yeah. Do like, do subscribe, and life changing. Thank you.